For many Americans, the idea of using tax-advantaged retirement savings for a golden visa investment is tempting. It seems like a clever way to get both a return and a residency permit. But what most foreign advisors won't tell you is that it is a trap that could lead to your entire retirement account being fully taxed with substantial penalties. Before we dive in, if you're looking for other funding options, my video on funding a golden visa investment explores sources of capital and IRA adjacent options. The risk here is not a tax loophole. It's a fundamental conflict between U.S. and foreign law that can trigger prohibited transactions. The core of the problem lies in the clash between two legal systems. In the U.S., our common law system recognizes legal structures like trusts and IRAs as separate entities. The U.S. law is very clear. IRA assets must be titled in the name of the IRA itself, not in your personal name. If an asset is titled to you personally, U.S. law considers it a prohibited transaction, treating the entire value of your retirement account as a taxable distribution. Portugal and some other golden visa countries operate under a civil law system. These systems do not recognize trusts or IRAs. A civil law jurisdiction looks through the trust and titles the assets to you, the individual, because you are the ultimate beneficial owner. This legal mismatch can trigger a host of catastrophic tax consequences under U.S. law. In the context of a golden visa investment, there are three primary traps you must be aware of. Self-dealing. This rule prohibits a fiduciary of an IRA from personally using the assets of the IRA. When you use your IRA funds to invest in a golden visa fund, but the assets are then titled to you personally, you are technically engaging in an act of self-dealing. This is also true if you open a bank account in Portugal in your own name and pass IRA assets through it, or in the name of a Portuguese LDA, that's a business entity owned by you. Flowing your IRA capital through a personally owned bank account, even if it's just for a minute, is a prohibited transaction. Same goes for currency exchange services. If it's in your name, your IRA is busted. And for those of you who are deep into this topic, a special message for you. No, a U.S. IRA LLC cannot send capital to a Portuguese LDA towards making a golden visa investment unless the LDA is owned by the U.S. LLC, and it can't be and still qualify for the golden visa in Portugal. And even if it could, asset titling and FATCA reporting can still bust you. Another prohibited transaction is extension of credit. The law prohibits you from extending credit from your IRA to a disqualified person, and that includes yourself. In practice, this means you can't make a personal loan from your IRA to yourself or to an entity that you own, like a Portuguese LDA. The third prohibited transaction I want you to be aware of is self-benefit. This is the most direct and unavoidable violation in the golden visa marketplace. This rule prohibits you as a fiduciary of your IRA from using its assets to gain a personal benefit for yourself. A golden visa is a prime example of a self-benefit prohibited transaction. The investment, which is a private asset owned by your IRA, is being used to acquire a direct personal benefit for you, namely eligibility for legal residency in a foreign country, tax-free gains in Portugal, and a path to citizenship. These are explicit personal benefits that are not investment benefits. There aren't as many red flags for self-benefit as there are for self-dealing. Perhaps the risk could be justified if the only risk were for self-benefit. As it stands, with both self-benefit and multiple instances of self-dealing, I strongly urge you not to use your U.S. IRA for a golden visa investment. Many investors believe they can get away with this, and I am sorry to see many golden visa funds encouraging them to try with misleading promises. The risk is not worth it. Furthermore, there is currently no suitable exemption in place from prohibited transaction rules for the investment of IRA capital in civil law jurisdictions. While some professionals argue that analogies can be made to rules for other types of U.S. retirement plans, there is a clear absence of an explicit exemption for IRAs. This is a problem with no easy solution. I know because I have personally requested guidance from the United States Department of Labor on this topic with the goal of helping U.S. investors navigate jurisdictional mismatch and avoid the risk of financial ruin. To date, no guidance has been returned. That means there's no easy way around the prohibited transaction traps inherent in Golden Visa subscriptions for IRA investors. Here's the bottom line. This is not a gray area. It's a fundamental legal conflict. You cannot use IRA capital for a Golden Visa investment in a civil law jurisdiction without risking your entire retirement account. And not just that. If you invest inside of a tax wrapper like an IRA, you won't have cause to choose tax treatment for the PFIC investment that brings the tax rate on gains and income down from 37% because, of course, you would have mistakenly thought that the investment was in a tax shelter in the US. So if your prohibited transaction is discovered and FATCA reporting is the flag for that, you could not only owe tax and early distribution penalties on the gross of a traditional IRA, this is somewhat mitigated if you use a Roth. You'll also be liable for tax on fund income and gains at 37% and associated interests and penalties. Underreporting of U.S. income tax due can be subject to a 40% penalty on that tax due. In a worst-case scenario, one $600,000 investment could incur over $750,000 in taxes and penalties. Please don't. And if a fund tells you that they have outsmarted the U.S. Department of the Treasury dragnet, really? If they can't be bothered to make a simple regulatory filing in the U.S., do you really think they've outsmarted the U.S. IRS? And do you trust them to protect you from the consequences of a prohibited transaction in your IRA? I humbly suggest that is entirely too much trust to place in someone who wants your money. I understand that we live in scary times. People motivated by fear can make really expensive mistakes without realizing it. I'd like to help you. May I suggest considering a loan so that you can avoid banking, titling, and benefit triggers for prohibited transactions? You have an IRA to Golden Visa fund structure you'd like me to review. I'm available for one-on-one engagements, and I'd be happy to. You can book time with me through my website at goldenvisadirect.com. For a full education on how to identify these risks, understand the legal arguments for mitigation, and protect your retirement savings, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.